6 HMRC rules are changing in 2026. Get one wrong and you're looking at fines starting at £100, and it gets worse from there. Most people on a regular salary think this doesn't apply to them. It does. The second you earn anything outside your 9 to 5, a side hustle, freelance work, renting a room, HMRC wants to know about it, and they're getting better at finding out. We'll get to the one thing almost nobody knows about number 4, but first, let me show you what's actually changed this year. Number 1, your personal allowance, frozen again. Text overlay, personal allowance equals £12,570. The personal allowance, the amount you earn before you pay any income tax, is £12,570. It's been frozen since 2021. It stays frozen until 2028. That sounds fine, except in real terms, you're paying more tax every year because wages go up. The threshold doesn't. That's called fiscal drag, basically the government raising taxes without actually changing the rate. If your salary went from $30,000 to $33,000 over 3 years, you just handed HMRC an extra £600 a year, without a single rate change. Check your tax code right now. It should say 1257L for most people. If it doesn't, ring HMRC or fix it through your personal tax account online. Do it today. Number 2, national insurance thresholds, the one that hit employees hardest. Text overlay, employee NI rate equals 8%, 12, £570.50, 270. Your NI contributions are 8% on earnings between £12,570 and £50,270. Above that, 2%. What actually changed is the employer side. From April 2025, employers pay NI from £5,000 of salary, not £9,100. That's a massive drop. Why should you care? Employers now pay more. That money has to come from somewhere. Pay rises, new hires, hours, it all gets squeezed. You might not see it on your payslip, but you'll feel it. Number 3, self-assessment. You probably need to register and don't know it. People assume self-assessment is just for the self-employed. It's not. Text overlay, you must register if you earn over £1,000 outside PAYE. If your side income, Etsy, Deliveroo, tutoring, anything, goes above £1,000 in a tax year, you need to register for self-assessment. That's the trading allowance, £1,000, not $10,000. The deadline to register for the 2024 to 2025 tax year is the 5th of October 2025. Miss it, and you're already in penalty territory. The fine for missing the January 31st filing deadline, it starts at £100 immediately, then it compounds, daily charges kick in after 3 months. After 12 months, HMRC can charge up to 100% of the tax owed on top of the original bill. Receipt, GOV self-assessment penalties, page showing £100 immediate fine and daily charges after 3 months. Number 4, the one almost nobody knows about. Seriously, this could save you real money. Most people doing small amounts of freelance work don't know this exists. Text overlay, trading allowance equals £1,000 tax-free. The trading allowance lets you earn up to £1,000 from self-employment completely tax-free. No tax, no NI, no filing required if you stay under it. Same goes for the property allowance, £1,000 of rental income, completely free. Here's the clever bit. If your expenses are less than £1,000, you're better off claiming the allowance than your actual costs. You don't have to justify anything. You don't have to keep receipts, just claim the flat 1,000. But if you're above £1,000, you choose deduct actual expenses or deduct the flat allowance. You can't do both. Pick whichever gives you the lower taxable income. That choice alone could save someone on a modest side hustle hundreds of pounds a year. Work it out before you file. But here's the thing. The numbers aren't really why people mess this up. The rules aren't complicated once you see them. The problem is people avoid it. They file late because they're scared of getting it wrong. They miss deadlines because they reckon it'll be fine. And that delay costs more than the tax itself ever would have. A £100 fine for a bill that was actually £0 because they just didn't register in time. There's the psychological bit nobody mentions. Registering for self-assessment feels like you're inviting HMRC into your life, like you've flagged yourself. But reality check, HMRC already knows. DSC 7, the EU data sharing rule the UK kept post-Brexit, means platforms like eBay, Airbnb, and Vinted now automatically report your earnings to HMRC. You're not hiding anything. You're just late. Number 5. Dividend and savings allowances. They've shrunk. Text overlay. Dividend allowance equals £500. Personal savings allowance equals £500 1,000. If you hold shares outside an ISA and get dividends, your tax-free allowance is £500. It was £5,000 just 3 years ago. That's a 90% cut. Your personal savings allowance depends on your tax band. Basic rate, £1,000 of interest tax-free. Higher rate, £500. Additional rate, you get nothing. The fix is straightforward, and almost everyone ignores it. Use your ISA. £20,000 a year goes in tax-free. Every bit of interest and growth inside it, HMRC can't touch it. If your savings are sitting in a regular account earning 5%, you're probably paying tax you shouldn't. Receipt, Vanguard IS, a platform showing £20,000 annual allowance and tax-free growth label. Number 6. Payments on account, the thing that blindsides every first-time self-assessment filer. This genuinely shocks people. Text overlay, payments on account equals 50% of last year's tax bill times 2. When you file your first self-assessment and owe tax, HMRC doesn't just collect that amount. They also collect an advance payment toward next year's bill. It's called payments on account. 50% of your current bill paid twice, January and July. So if you owe £800, your January bill is £1,600, £800 for the year gone, £800 up front for next year. First-timers get completely shocked by this. You can apply to reduce payments on account if your income dropped. Do it through your self-assessment account online. Don't just not pay. HMRC charges interest from the due date. Bonus, child benefit, and the £60,000 trap. This wasn't in the original list, but it catches too many people. Text overlay, high-income child benefit charge kicks in at £60,000. If either parent earns over £60,000, the high-income child benefit charge starts clawing back your child benefit. By £70,000, it's gone entirely. The trap, you might not know you're over the threshold if you got a pay rise mid-year. And if you're receiving child benefit without registering for self-assessment, you're quietly racking up a debt to HMRC right now. Check it today. GovUK has a calculator, 2 minutes. This all comes down to one thing. One thing you can do right now. Go to GovUK and log into your personal tax account. Everything on this list, your tax code, your self-assessment status, your NI record, it's all there. 10 minutes. and it tells you immediately if something needs fixing before January rolls around. Receipt, GOV UK Personal Tax, account homepage showing tax code, NI contributions, and self-assessment status sections. If you're already doing side work and you haven't registered for self-assessment, do it today, not next week. HMRC flags late registrations. Early is always better than panicking in October. If the IS a bit hit home, and it should for a lot of people earning between 30 and 45,000, watch the ISA versus savings account video next. The link's on screen. I cover exactly how much tax you're quietly losing on regular savings accounts right now and how to stop it. This video is for information only, not financial advice. Always speak to a qualified UK financial advisor before making decisions.